Hello investors, welcome to the channel where I use technical analysis to find possible swing trades. Today we're taking a look at Agree Realty Corporation, ticker symbol ADC. This is a small cap REIT with a market cap just shy of $5.5 billion. It is a focused REIT, as many are, where they center on retail locations. And as said in their description, they have over 2,000 different individual properties across 49 states. And this is overall a good, solid REIT. And here we are on Agree's annual chart. You'll see the share price has fallen well below all the moving averages. In fact, we had this giant red candlestick last Thursday. And here is the previous earnings call, which was a miss by just over 1 cent per share, which is an extremely small miss, of course, but there is just the whole fear sentiment going on with REITs because of the increased mortgage rates that they will have to pay, or lease rates, given the federal interest rate is now higher anytime they have to refinance those mortgages and leases. The rates will be higher, and therefore the fear is, in any case, that they will make less money. So this has been pushing down the share price. And right now we are at the 52-week low, just about 52-week low. But of course, this could be an excellent opportunity to buy into Agree. If we look at the RSI, you'll see it's oversold and it's begun to turn sideways. The stochastics are both oversold and has begun to turn sideways. Now, the volume chart is a little misleading. You see here, it might look like this is low volume, but that is only because the scale of the chart is thrown off by these couple of enormous candlesticks in here. The lowest line on this chart, if you can't see it, is 2 million shares. So 2 million is certainly plenty of volume. It just so happens that they have a couple of days here where this one was sold 18 million and this one 12 million, and that makes everything else look comparatively small. But this is currently at, or perhaps slightly below average volume, but there is quite a few red days, as you can see on the chart here, and it has not switched back into green buying pressure yet. And on the MACD, it is still falling. It does not look like the lines are about to converge. So all these things together lead me to believe that Agree share price may even get lower, but it should absolutely be on your radar at the moment. If we switch over to take a look at the fundamentals here, you'll see Agree has low short interest at 2.83%, extremely high institutional ownership, 98.99%, perhaps the highest institutional ownership I've seen on any company. The debt to equity ratio is amazing. It has less debt than 90% of other companies, of other REITs. And if the share price is being reduced in fear of debt, right, in fear of that refinance problem with the higher interest rates, the fact that this particular REIT has exceedingly low debt puts it in an excellent position and would make the share price reduction due to the higher rates completely irrelevant. And it would just make, as I said, a great buying opportunity. Now, the PE ratio is still high. PE of over 32 is above average and beats out 67% of other companies in the industry. And of course, that is because some of these other metrics are excellent. We look over here at the gross margin of 88% is amazing for a REIT. And yes, it beats out 93% of other REITs. And the operating margin is equally as amazing at over 48%. And that operating margin beats out 93% of other REITs. So this is a top quality REIT. I'll also point out here the net profit margin is almost 34%, which is mind-boggling for a REIT here. That's something you might see in a tech company. For it to be in a REIT is absolutely incredible. This is a highly profitable company. Then we move on to return on equity. See, the return on equity also is above average, beats out 63% of other companies. Growth rate is average. And a dividend yield, since you're buying a REIT, you are probably buying it for the dividend. It is 5.1%, which is outstanding. And the payout ratio, it lists here at 165%. But as I've said with other REITs, we know that they play games with the accounting because REITs have special tax strictures and issues that they need to address in order to maintain their status in this accounting magic that they use to get this 165% is actually not indicating that they're paying out 165% of their income. So this is not something to be concerned with. In any case, Agree is an excellent REIT, and this share dip may present an excellent opportunity to buy it. But I'd like to know your thoughts. Please let me know in the comments below. And remember, none of this is financial advice. I'm not a financial advisor. I make these videos for education, information, and discussion. But if you get something out of it, I would appreciate it if you hit the like button and subscribe to help out the channel. If you enjoy this content, please hit the bell notification to be alerted when new videos post. And if you'd like me to take a look at a particular company using these indicators, just mention that in the comments, and I'll try to get to it as soon as I can. That's all for today. Thanks for watching, and good luck with all your investments.